Hello friends, we'll be discussing an illustration which will be completely related to reissue of shares, and rather again the forfeiture balance has to be transferred to the comprehensive or rather the capital reserve balance. So let's start with the illustration now. Now, as this is the last problem that we'll be solving when it comes to reissue of shares, or rather whenever we have talking about forfeiture and reissue of shares, we'll be taking everything into consideration. So this will be all in one problem for you. Now, Messrs. ABC Limited issued 20,000 equity shares of rupees 100 each. That means the face value of that specific equity share was about 100 per share, and like that they issued somewhere around 20,000 for subscription. Now, the issue price of per share was around 130 rupees, and the same was payable as follows. That means it was divided into three sections. First is the application, second is the allotment, and the third is the final call that they had to take. So let's figure out how exactly they took it. So on application, they took around 40 rupees. On allotment, they took around 60 rupees, which includes a premium of 30 as well. And on the final call, they took the last value, that is rupees 30 here. Now, let us figure out how many subscriptions they received here. Now, the subscription they received here was around 80,000. They issued 20,000, but the subscription they received here is somewhere around 80,000. Now, how the company dealt with it is, or rather has been described in the question. Let's figure out what exactly the company did. So the bifurcation has been given here as follows. They have divided the shares into three categories. The first 20,000 category of set or rather application were rejected completely here. The next 40,000 set of category, that means applications for 40,000 were given in the ratio of 4:1. That means for every 4 share applied, they've given around 1 share as an allotment. And the last category refers to another 20,000 applications for which they have provided 2:1 ratio. That means for every 2 shares applied, they have given around 1 share in return. That means half of the shares has been given, and accordingly they have allotted 20,000 shares out of 80,000 is what they've described here. Now let's look at the forfeiture matter. Now, Mr. X and Mr. Y are the two people who have defaulted on the payment. Mr. X defaulted on allotment as well as on final call for 3,000 shares, and Mr. Y defaulted on final call for 1,000 shares. Post both these defaults, the company decided to forfeit their shares. So the company went ahead with the forfeiture entry there. Now, Mr. Z was reissued with 2,000 shares here at the rate of 70 per share, and the paid up or other called up capital being 80. That means the value of that specific share was taken at rupees 80, and the amount that they have received here is at 70 rupees. That means the face value went down to 80 out of 100, and out of that thing, they reissued that same share at rupees 70 to Mr. Z. Now they have to figure out the journal entries first of all, then they have to go ahead with the preparation of accounts for first of all share capital, share forfeiture, and then the bank account. So let's start with the journal entries first. So the first entry will refer to receipt of application money. So let's start with that. So the application what we have received here is for 80,000 shares multiplied by 40. That will give you application money that we have totally received. Now, the next set will refer to the total amount being refunded. That means 20,000 set of applications was completely refunded here. So let's mention that now. So out of total 32 lakhs that we have received as application money, which includes allotment money as well, because isn't in that specific thing, or rather in application what we have received, we have done some pro rata allotment as well. That means there is certain money that you have received for allotment as well. So out of the total 32 lakhs, we have refunded somewhere around 8 lakh. So whatever is pending with us will be a total of application plus allotment additions to it. Now we are supposed to transfer only the application money to the capital. So that will be 20,000 shares multiplied by 40 rupees. So whatever balance is left will be taken care into allotment. So let's start with that. So this much is sent out to share capital. This entry only refers to a total of 8 lakhs been sent out only in relation to share application. So let me send you a calculation also about it. So in total, we have 24 lakh balance, out of which 8 lakh refers to application. So whatever balance is left with us, that will be completely adjusted when it comes to allotment money due. So in total, we have 16 lakh addition to what we can adjust in allotment. In case if you're not supposed to receive anything in allotment, we'll be able to figure out whether how much depends, or rather it completely depends on how much you're supposed to receive in allotment. So if you're supposed to receive anything more than 16 lakh in allotment, then this 16 lakh will be adjusted. If in allotment we figure out that there is very less amount that we're supposed to receive here, then accordingly the additions what is left out of that 16 lakh will be taken care into what, that will be final call. So let's figure out how much exactly we're supposed to receive here in allotment. So the next entry will be allotment due. So the total amount that we're expected or supposed to receive here is somewhere around 12 lakh rupees. Now, as we say that on allotment, we have an additional of 16 lakh which can be utilized. That means that total amount will be utilized here. Still, after utilizing that amount, we'll have somewhere around a total of additional amounts that we can talk about 4 lakh still left in addition. So here, if the question states about calls in arrears, ideally the calls in arrears won't be taken into consideration. The reason being, these people have already paid the amount in addition, so that will be adjusted here. So there are no call scenarios in this question that we can discuss about. So let's start with the receipt of allotment money. Now, the next will be the first call due, or rather, when we talk about first call being taken into consideration. So let's talk about the first call part here. Now, when it comes to share first call, yes, we only have an additional balance of 4 lakh that can be utilized out of that allotment money. Hence, we still are expected to receive 2 lakh rupees, out of which the calls in arrears will be taken into consideration here. The reason being, every credit balance that those shareholders had has been exhausted by utilizing those 4 lakh. Now, still they haven't paid this amount. Hence, here calls in arrears will be there, and hence the shares will be forfeited after that. So let's talk about the calls in arrears entry, or rather receipt of share first call. 6 lakh is what we were expecting. Out of 6 lakh, 4 lakh has been already adjusted due to the share allotment balance. So pending amount refers to the specifications of what? That will be the calls in arrears now. So calls in arrears will be Mr. X and Mr. Y who didn't pay the final call money, because Mr. X, for the allotment money, it has already got adjusted because he has already paid up the additional amount in terms of the applications, because the allotment happened for very less amount for him. Now, the next category refers to final call where both X and Y didn't pay the amount. So that means 3,000 shares plus 1,000 shares, total of 4,000 shares into 30 is what we haven't received here. So let's mention that. So 1,20,000 we haven't received it totally. That means the balance is the amount that we have received here. So let's mention that here. So in total, we would have received somewhere around 80,000 in our bank account. Now it's time to mention the share forfeiture entry, because this is the last entry where the amount was supposed to be called up and the amount has been paid up, after which the company decided to go ahead and forfeit the share. So let's pass the forfeiture entry now. Now, the share forfeiture entry will refer to share capital account debit, as premium is out of question because that has been already paid. Hence, this share forfeiture will have only calls in arrears. So, share capital account debit to calls in arrears to share forfeiture account. So, let's start with that. So, the share capital account will have number of shares being forfeited multiplied by the called up amount. Called up capital amount only, that will be total of 100 rupees which has been called up here. As both the shares are being forfeited here, hence we have taken that into consideration. Now, the next thing will be total calls in arrears. Calls in arrears we've already figured out, that is 1,20,000 in total. So we'll mention that here. Now, the next part will be calls in arrears. After being mentioned, we have to figure out the balance there. So the share forfeiture account balancing figure has somewhere around 2,80,000. Now the next part will be the reissue of shares here. Now reissue is at a different moment, or rather you can understand that the paid up capital and called up capital is different. Rather the face value is different as compared to the earlier 100. So let's mention that part. The next entry will be reissue of such shares. Now, when the reissue happened, only 2,000 shares were reissued at the rate of 70 per share, and the face value of that specific 70 per share was around 80 rupees. That means a loss of 10 rupees was paid, and that loss will be taken care by the share forfeiture account. Now, when it comes to transfer of balance to capital reserve from the share forfeiture, we cannot transfer the regular balance. That means 2,80,000 is the balance, out of which we utilize somewhere around the difference between 2,000 into 10, or rather 2,000 to 10, 20,000 has been utilized. The balance, whatever is left, can be transferred to share forfeiture from share forfeiture to capital reserve. It cannot be done like that, because only partial shares have been reissued, not complete shares. Had it been complete shares would have been reissued, then it would have been a different criteria altogether. But in this case, this scenario, it is not the scene here. So what we need to do here is that in case if there is a partial transfer, or rather partial reissue, then we have to take the value of partial reissue itself. Let's figure out how that has to be done. So the first thing is the number of forfeited shares will be divided by the total amount of value that we have, or share forfeiture balance. So let's figure out that part. Now the calculation that we have done here is made very simple for you to understand. We have done the calculation in the most simplest manner. The first thing that we need to figure out, or rather there are four steps that you need to do. The fourth is the conclusive step. The first three steps are the most important steps. Whenever partial transfer is done or partial reissue is done, the first thing that you need to figure out is the forfeited amount per share. That can be done by utilizing the opening balance of share forfeiture account divided by the number of shares forfeited. That means whenever the shares were forfeited, somewhere around 4,000 shares were forfeited here, and the total balance that we had during that share forfeiture was 2,80,000. So 2,80,000 divided by 4,000 will give you per share around 70 rupees. Out of that specification, you have to subtract the loss that has been paid. So the total loss that you have paid here while reissuing is somewhere around 10 rupees. That loss has been paid. So that will be subtracted. Whatever is left, that is the surplus that you have. So that surplus refers to the transfer, or rather that balance is referred to only the amount which are being transferred there, or rather the shares that are being transferred. So that will be multiplied by the number of shares being reissued. Here in this case, 2,000 shares were reissued. So 60 multiplied by 2,000 will give you a balance of 1,20,000. So whatever balance is supposed to be transferred will be this specific amount. So when you have to pass the entry for share forfeiture here, that means share forfeiture account debit to capital reserve, that will be only 1,20,000. So now that we have mentioned this here, we have completed the journal entries. The next step is to prepare the specifications related to the ledger account. The first thing that we'll be preparing is the bank account. So let's start with the bank ledger account first. So the first entry that we'll mention here is receipt, or rather all receipts and reissue entry will be mentioned in this bank account. So let's start with that. Now, after the first application received being mentioned, we'll mention the refund entry, and that will be on the credit side here of the bank account. Now, the next will be receipt of allotment money here. Again, in allotment, we have received the complete money utilizing the adjusted allotment money that we had. So that means total of 16 lakh rupees is what we have received here. The next will be the final call money that we have received. That will be only somewhere around 80,000. Now, the last entry that we have to pass here when it comes to reissue is only, or rather in the bank account is only the reissue entry that we have to pass here. So let's start with that. Now that the bank account has been completed, we can figure out the total tally and the balancing figure in the bank account. Let's start with, or rather, let's complete that now. Now that the bank account has been prepared, the next will be share capital account. So let's start with that. So the first entry will be application, then will be the allotment, then will be the final call, and then will be the reissue share capital here. So let's mention everything here. Now we've mentioned application, allotment, and first call. Now the next part on the debit side will be mentioning is the forfeiture share capital. So let's mention that thing. Now after share forfeiture, the next thing that we have to mention here is the reissue. That means where the bank account was debited and share capital was credited. So let's mention that. So here share capital account totaling needs to be done. Everything has been mentioned here. Let's figure out what is the balancing figure that we have. So the balance in share capital will be 23,60,000, which has been mentioned here. Now the next phase, or rather next part that we have to discuss here is the last account, that is share forfeiture account. So let's start with that part now. So the first thing that we'll be mentioning here is share forfeiture balance on the credit side. So let's mention that. So the opening balance is 2,80,000, out of which we have utilized certain thing when it came to reissue. So let's mention that as well. That will be on the debit side. Now, the next will be the transfer to capital reserve here. Share forfeiture account was debited, hence on the debit side it will be to capital reserve. Now, as this is only 50% shares being transferred, hence you will see that only 50% shares have been, or rather 50% of the value is only left in the account, which will be the balancing figure here. Because whatever percentage you transfer and whatever is left, that will be equivalent to the amount in terms of percentage as well. So for verifying that thing, the debit side will be 1,40,000 here. And the credit side is 28, or rather 2,80,000. That means it is equivalent to 50%, because we have transferred only 50% of the balance to the capital reserve. Hence 50% of the share value which is not yet reissued, it's still in the share forfeiture account. Hence there will be certain balance that you have to figure out. So that balance will be taken care. So the balance that we still have in the share forfeiture is 1,40,000. Let's mention that and close this account. So this is how the share forfeiture account is supposed to be prepared. I believe that with this last sum on reissue, all your doubts on reissue of shares, transfer of balance to capital reserve, especially when partial shares are being reissued, has been cleared out. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.